Hey everyone, Couch Investor back to another video for you today. So let's start this video with an hypothetical question. Let's say I'm coming to you today and saying you can only invest in 3 companies in 3 stocks for the rest of your life. Which one would you choose? Write it down in the comments and write a short reasoning behind it as well. Not 1, not 2, not 4, just 3 companies. Now in this video, I'm going to go over the 3 companies that I chose. Most of them are the obvious choices if you've been following the channel for a while. One of them might actually surprise because it's not in my main portfolio. It's in the second one, a very small one where I just basically add $100 each month. On the same day, you can follow that along. It's on stockcar.io. It's free to follow. Link is in the description. So the first one is the obvious one and it's my largest position in my portfolio, and that's, drumroll please, it's Tesla. Why am I invested in Tesla? Well, because I do think that it will be, just like Elon Musk said, it will be the largest company in the world, the most valuable company in the world. Why is that? Well, first of all, they're in a market that is completely changing. The car market is completely changing. We're going electric. How long will that take until the billions of cars around the world go electric? I don't know. But Tesla there, to me, are still the leaders. They're the one with the highest profit margins, operating margins, free cash flow in billions, unlike the competition, which is in debt, not really has that flexibility of high margins. Plus, when it comes to software, well, nobody comes even close. I'm not talking about robot taxis or anything like that, or the robot. That's not even in my thesis right now. It's something that I know might happen, but I'm not counting on it in the coming years. I'm just counting on them making the best cars possible, making the best software possible, and then selling it at a reasonable price for them to sell a lot of units, but also have a high enough margin to beat the market and continue to grow. Now, currently, I think we can all agree that the current crop of cars that Tesla provides is not enough. And this is why we're talking about Generation 3 platform, etc., the $25,000 car, which will completely break the market in a good way for Tesla. Because yes, right now Tesla cars are expensive. They're not affordable to the mass market. We've talked about that in the previous video. If you want Tesla's total addressable market to grow to close to 100%, you need that $20,000 to $25,000 car. Of course, we now have also the Tesla Semi, maybe later this year, the Cybertruck. So that's opening up other doors as well. But currently, just let's be honest, we don't have enough cars, enough models to sell to the mass market to reach that 20 million goal by 2030. Now, of course, we can talk about all the other aspects here, insurance, FSD, the energy side of the business, which, by the way, we should stop hyping it up like crazy on YouTube and Twitter. It's still a small part, yet it is a very fast growing part. Already right now, 12% margin or something like that, and it's something that is just beginning to ramp up. Let's be realistic right now and stop making assumption that will be at $10 billion in gross profit already this year or something like that. Probably it's not going to happen this year. Might happen in the future. Elon said himself, the energy side of the business will be as big, if not bigger, than the car business. So let's give them time to develop this, because it does take time and a lot of resources, which right now are either expensive or just not available. So the Tesla thesis here in short was basically that, but I do want to end the Tesla part with just showing you these graphs right here. Year over year growth here, the red line is obviously Tesla. You can see here clear difference between S&P 500 and the auto industry. Tesla, huge outlier here in a positive way. Then operating margin. Red line here is Tesla, S&P 500 just below it, and then the competition is way below it. And then when it comes to, well, ASP, average selling price, and operating margin, this is the graph that should shut up all the doubters when it comes to, oh, Tesla is lowering prices, blah, 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 it's going to hurt the business. Yes, of course, it's going to hurt margin in the short term. But as you can see, average selling prices have been coming down for a while. And what happens with operating margin? Well, it kept on going up. Of course, with the Generation 3 platform, average selling price should continue to decrease, but probably operating margin should continue to increase, not by, I don't know, another 10 percentage points or something like that, but should increase. And so for all the doubters that say, oh, Tesla is just destroying its business right now because it's lowering prices, well, this graph explains it all. Now, before I go into the second position, the second stock here, would really appreciate it if you hit that thumbs up button and subscribe if you have not. Really helps out the channel. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. And now the second position is also pretty obvious if you follow the channel, and that's Amazon. It's my second biggest holding. Of course, the stock currently, even though the market has been pretty green lately, Amazon stock hasn't moved that much. And in my opinion, that's because the whole market is waiting for it to report earnings. We're going to cover that on the channel next week and see how well the costs are faring for the business, how growth is maybe for AWS, but especially for the core business as well. With regards to AWS, we've talked about, well, we've not yet talked about it in this video or in another video about how Microsoft has done. So obviously you can compare Azure to AWS, see if they're slowing down with growth, how can that impact Amazon, etc. But with Amazon, I'll explain it again pretty simply here because I did cover this company a lot on this channel, my bull thesis for it as well. But to visualize it better, let's go and see what my good friend has posted. So this is a graphic made by Economy App on Twitter. App Economy Insights has also a Substack. Very good follow. This is free actually. So this was basically Amazon's last quarter. Now, of course, we know that revenue-wise, well, Amazon has a lot of revenue in the last 12 months, close to $500 billion in revenue. But when we talk about profitability, well, that's a whole other story. So, of course, for revenue, the largest part is still the online stores. Then you have third-party sellers, subscription, advertising, which to me is a very exciting business. I'll keep repeating it over and over. Advertising is growing like crazy. And then, of course, you have AWS, which is very important because if we go and follow these snakes here, we can see that gross profit here for that $127 billion in revenue is $56.8 billion, 45% margin. Now, if we continue even more to operating profit, we see it's only 2% margin, $2.5 billion. And why is it still green? Well, that's because AWS here is $5.4 billion, but the others is negative, so it's down to $2.9 billion. And then that leaves us with a net profit of $2.9 billion. Now, will this change over time? 100%, because if you see cost of revenue, $70 billion, operating expenses, $54.3 billion. We know that fulfillment has been going up because of the pandemic. They've basically overinvested. Then technology and content, $19.5 billion. We know cost cuts, a new program has been put in place to well reduce those issues that you can see right here, which should make the core business for Amazon much more profitable over time, of course. Now, with Amazon, I'm not going to continue and rambling around because this video will be way too long, but with Amazon, it's pretty simple. They're investing millions, if not billions, in robotics. I don't know when, but maybe a decade, maybe even more, there will probably be more robots working at Amazon than humans, which means the efficiency levels will just go up and the costs will come down. Of course, you still have costs with regards to the robots, but with regards to salary, everything that comes with, well, employing a human being, that will come down. And with efficiency going up, well, basically skyrocketing, you can probably see what will happen at the bottom line. But overall, the faster growing businesses for Amazon, which is Prime Services, advertising, AWS, which are also the more profitable businesses, are becoming bigger and bigger on the bottom line for the company. That's not to say that it doesn't need the online stores. No, it's a crucial part of the business as well. So as a whole, I think Amazon right now at the current price as well is just, it's a crime not to own it, in my opinion. And then lastly, number 3, a stock I don't own in my main portfolio, but it's in this more second portfolio. It's a stock I mentioned in this video already, and that's Microsoft. So Microsoft to me is obviously one of the best diversified companies that you can own. It touches a lot of growing industries right now. Why don't I own it in the full portfolio? Well, because 1, I don't have a spot for it. 2, I do think that today, valuation wise, it's expensive compared to the other companies that I've talked about in this video that are probably growing as fast or maybe a bit slower, but still valuation wise makes more sense. So why don't I own it today? Purely because I don't see why I should be starting to build a position with Microsoft today at the current prices. But if you need an explanation, we're going back here to Economy app, where he basically provides good information when it comes to their income statement. So revenue here grew 2% year over year to $52.7 billion, a $450 million miss. Gross margin 67%, a 10 percentage points miss year over year, so decrease, year over year. Operating margin 39%, operating cash flow margin 21%, minus 7 percentage points year over year. Earnings per share, a beat by 1 cent to $2.32. And then Microsoft Azure has grown 31% year over year, or 38% on an FX neutral basis. Now, if we look at Microsoft here, we can see revenue $52.7 billion. We can see here $17 billion come from Microsoft 365, LinkedIn, so basically productivity and business processes. By the way, LinkedIn has grown quite fast, even to my surprise. Then you have your Intelligent Cloud, 41% operating margin there. And then more personal computing, so Xbox. Now, with regards to Xbox and the gaming segment, I did see some comments with regards to it slowing down. The demand for its game, the Game Pass or the subscription side of it is slowing down. So some might say that Microsoft probably needs to acquire Activision Blizzard and not wants to. It needs to add this to its portfolio of, offerings to keep their probably gaming segment, not say alive, but keep it growing, apparently. Now, if you need to know a bit more about Microsoft, they also have cybersecurity, which is growing pretty fast. They also have an advertising side. We've seen Netflix partner up with Microsoft. It's growing that side as well. Then you get everything as the cloud business, of course, second largest after AWS, what we've talked about now, 365, LinkedIn. I mean, Microsoft is a very, very well-run business, has various segments that are profitable, generating a lot of money. I mean, if you look at gross profit here, 67%, operating profit 39%, and then net profit 31%. Compared to what we've just seen with Amazon, this is day and night. But again, valuation today, especially if you see at the growth metrics today, maybe opening a position right now is not the best thing, but I did have to put it in one of the three companies that if I have to buy today to own for a long, long time, for the rest of my life, basically in this hypothetical scenario, then yes, it has to be one of the three. Of course, it also pays a little dividend as well, so that's always great. So there you have it. That's a short summary, let's say, about if I had to choose between all the companies around and choose just three for the rest of my life, I choose Tesla, Amazon, and Microsoft. These are my reasons, me personally. Of course, share yours down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.